money will be bailed out to some degree by the taxpayers through the law's premium stabilization program. Would you all agree?
I would agree, yes.
Yes, that's
Would
the
you
purpose
agree,
of it.
Mr. Goodman?
Yes.
Yes.
Yeah,
Mr.
that's the
Joss?
purpose of these programs, yes.
Okay,
Is
so,
stabilize premiums.
but they'll be bailed out to some degree, the insurance companies, right?
Well, the insurance companies are sharing risk with the federal government.
Right, but anyway, I'm actually quoting you, Mr. Jost, from your November editorial about this. Insurers that lose money will be bailed out to some degree by the taxpayers through the law's premium stabilization programs. Could have said it better. This is just another shameful part of Obamacare. Look, I serve on the Financial Services Committee. Mr. Jost, you say that this risk corridor provision is very similar to flood insurance, right?
That's correct.
Okay. Do you know that the taxpayers are on the hook for over $50 billion in payouts? So the flood insurance program is underwater to the tune of $50 billion for a taxpayer bailout. The example, I think, is perhaps a good one, unintentionally. It is, again, a very problematic feature when the government gets into the marketplace. And look, I understand if you're a health insurer, this is probably a very positive provision for you. So thus, when the administration makes their, I don't know how many additional changes they've made in the last 2 years, above and beyond what is they're really able to do under the law, the health insurers are not complaining as much, though, about this ad hoc rulemaking as perhaps they would be if they didn't have this bailout provision within the law. Mr. Badger, is that approximately right? Is that how you would see it?
Well, as I said before, when this announcement was made that at least the federal government would not enforce a law requiring cancellations, the CMS responded with $500 million in payments to insurance companies out of the risk pool, according to CBO's estimates.
Where does the money come from, the risk pools?
Well, out of the risk corridors, it is supposed to come from payments from insurers who make, quote, excessive profits.
Okay.
So it should be totally internally distributed. Unfortunately, CMS has indicated that they will throw taxpayer money on the table if the receipts aren't enough to cover disbursements.
Okay, so to understand this, if I pick a different policy in my exchange, and that company is deemed to make excessive profits, where do those excessive profits come from?
Well, the excessive profits obviously come from the premiums.
Oh, the premiums. So therefore, I made a bad choice, and perhaps I'm paying a higher rate than someone else who is in another company that is getting the bailout, right?
Yes, it's certainly true that the money is supposed to come from exclusively from the premiums, although sometimes taxpayers are implicated as well.
Okay, so if you have 3 providers in the exchange, and you make a choice for one that is maybe the middle price one, you might be subsidizing the lower price one.
The so-called excess premiums or excess profit based on your premium may well be funneled through to that other insurer, yes.
Okay, interesting. So this could be a taxpayer bailout in execution, or it could actually be a bailout funded by those that are obligated to buy insurance through the exchange.
Yeah, the money either comes from the premiums that people pay or the taxes that people pay.
Okay, so this is not like the Federal Reserve printing money and making money from nowhere, right?
No.
Okay. Now, I ask this because it's a very common question I've got at home from my constituents about this. Look, the reason why we're talking about this is because of this grave concern about the government overreach. Look, if you're a health insurer, I see why this is a very, very positive. If you're in the business of health insurance, it's probably a pretty positive thing because it takes your risk away, and it also means you're a little more compliant with the administration when they make rules changes, so it benefits this administration's ad hoc rulemaking, right?
There are mutual interests there, yes.
Thank you, Mr. Chairman.
I thank you. We now go to the gentleman from Virginia.